Michael McKee on PPI. What do you see, Mike?
Well, we're waiting also for jobless claims, but with PPI, we're seeing a better than expected number like we did with CPI yesterday. Final demand month over month, only up 0.1. It was forecast to be up 0.2. The ex-food and energy up 0.1. Ex-food and energy and trade, which is kind of what we look at as the core number for PPI, up only 0.1 as well. So on a year-over-year basis, headline PPI is up 2.4%, getting close to that Fed level, and the core 2.6%. So more good news there. There was some thought that we might see a negative print with PPI this time, but not yet. Now, jobless claims come in lower than they have been, which is another surprise. 237,000 after 240. Let me get that number. 249 the week before. So it was raised by only 1,000. So jobless claims continue to show the strength of the labor market. The number of people who are still getting benefits, continuing claims, 1,729,000. That is only slightly up from 1,718,000 the week before. So we're not seeing layoffs in any great to any great extent, and we're not seeing prices rising to any great extent. And that raises the question of soft landing and how many more times the Fed does feel it needs to raise interest rates.
What else do you see, Michael?
Well, the only real news in the PPI is that it was all in services, a 0.2 rise. For services, there was no change in goods prices. We had seen the goods versus services turn around a couple of months ago, and goods prices start rising faster, but now they've flattened out again. So it looks like the trajectory is good, and I know you'll talk about this with Torsten, but of course, PPI, not as important, doesn't have a direct relationship with CPI, but overall, the inflation news is good right now.